Welcome to the Finance Podcast. The topic of this episode, DeFi and Web3, Future of Decentralized Finance, with the speakers Paolo Guarnerio, Nayana Talwar and Florian Rais, moderated by Darin.
Good afternoon, everybody. Welcome to the probably only English-speaking panel that we're going to have here. We'll be talking about the future of DeFi, Web3, many exciting questions with my fellow panelists. Welcome. Thank you for being here. Why don't you introduce yourself briefly? Ladies first.
Thanks, Roger. I'm Nayana Talwar. I'm heading the private banking business at Sygnum Bank. Sygnum is a fully regulated digital asset bank in Switzerland, and we are helping our clients bridge the gap between CeFi and digital asset space. We've been regulated since August 2019, and we have a value base of asset under management of 4.5 billion. And more than almost 2,000 clients across 70 plus countries.
Awesome, great success story. Please, Paolo.
Good afternoon, everyone. My name is Paolo Guarnerio. I'm responsible for business development at SDX Web3. SDX is part of SIX Group. We are running a fully licensed stock exchange and the CSD for digital security. And since a couple of years, we are also providing infrastructure service for cryptocurrency. Public blockchain and everything which is not considered a security.
Thank you very much.
Hello, I'm Florian Rais, founder of Criptonite Asset Management in Geneva. Our group is formed of two companies. We have one which is based in Los Angeles, SEC regulated, and one is here in Switzerland, FINMA regulated. Both companies were started with a simple idea, is crypto is nothing different than any other asset class that we've lived through. Just different codes, just different style. We just need to have someone who's going to offer product and help in order to manage it. So out of an idea, we created this group of asset management. We manage today about $1.5 billion in different funds and segregated accounts, and our core business is to manage through DeFi and CeFi money for protocols and miners, whales, and crypto natives. But now, thanks to Sygnum, which we partner quite a lot, we are approaching the traditional investment management sphere.
Awesome, thank you very much for the introduction. So we have three regulated players here to talk about maybe a regulated, maybe unregulated topic. But in any case, we did talk a lot about Bitcoin and ETFs and regulation, but this is DeFi, this is Web3. Can you maybe all get us started into the topic? What is actually happening in this space, or what has happened over the last 6 months or so?
Well, obviously, the biggest event of the last 6 months, as we all know, has been the approval of ETF, which has put Bitcoin really at the center of all discussions, simply because suddenly it was endorsed by traditional firms which are driving the show. But if we look at this, we like to make the comparison of, everybody says, it's very different, we don't understand DeFi, we don't understand what's happening in the sphere in general with crypto. And I'm old enough to remember when we were talking about emerging markets. Emerging markets in traditional assets had total different codes. They were not plugged into the classic banking system. In order to invest in some emerging market, it was very cumbersome. You had to send money, you had to get in cash, you had to go to the exchange, you get the shares back, all of it. It was not a traditional way to invest. And suddenly, those markets were plugged into the traditional banking system. This is exactly what's happening now with crypto. We are plugging it to the traditional banking system. So the point I'm making is, again, it's not different. Yes, it is, but at the same time, it's not. Regulators were slow to act simply because this is the first time in financial history that an asset class was born from the retail. And this is very important because this asset class was born from the retail, which means that every institutional player suddenly receives codes that he's not familiar with. So it takes time to adapt.
That's an interesting comparison, crypto and emerging markets. I can totally see that. What is new for you? What has you excited?
I fully agree. I think that there are two aspects of when we're talking about digital assets, right? There is everything which, at least in Switzerland, is considered non-security, which is Bitcoin and other cryptocurrency. And on that front, we see a lot of traditional players, banks, but not only, that are suddenly realize that there is demand, and they are now building the infrastructure to be able to support this new asset class. And when I'm talking about infrastructure, it's not only about custody, but it's really about all the process that goes around these new asset classes to make sure that they can comply with the regulatory framework where they operate. At the same time, we also see an increasing demand and interest of digital security, and that's where SDX is playing an important role. These are traditional security, which are already under a clear framework, regulatory framework. The difference is that these security are now issued on a new platform, a new technology, which is called blockchain, and it brings, of course, operational advantage to the market participant, but also challenges from the regulators and from FMI such as SDX.
Agreeing with Florian that how this asset class actually came from the retail, you see the same thing happen in DeFi and Web3 space, right? It really started from the retail space, and now it's getting a little bit more professional as more and more institutional players are entering. But if you see in the institutional players also that you have a lot of traditional money, which is maybe on DeFi Web3, but the institutional money mostly comes from more professional funds, hedge funds, which have built up their expertise, right? We don't see a pure traditional player trading or lending on DeFi, and that's a huge gap for real institutional money to come there, and that's where regulation comes into play. So it's very interesting that how DeFi and Web3 is at the center, but I think it has some way to go before it gets really mainstream. But if you see in terms of TVL, right, we have crossed 100 billion in 2023 already, and many players are there, but even the regulators, I think, find it tough to how to regulate it, right? And it's a lot about industry and government coming together, understanding or identifying the basic technical definition of DeFi first, right? How is it different from CeFi? And that's when you can measure what red line risks you actually have. And then only I feel that the DeFi protocols can really manage the risk or mitigate the risk, right? So there are some really professional steps which have to be taken to get the industry, government on the same table to have these discussions. So
I want to come back in this in a minute, but until then, let me circle back quickly to the Bitcoin ETFs. I mean, in Switzerland, we've had products that allowed you to invest in Bitcoin, Ethereum, and the like for close to 10 years now. And yesterday, somebody here at the Finanzmesse pointed out that in the US, we haven't had that opportunity for as long. So Switzerland had a head start of 10 years. And it took the US all of 2 weeks to surpass the amounts, the money under management in crypto that built up in Switzerland over 10 years. So is this retail going crazy in the US? Who is buying these ETFs?
Well, I think, if I may, what you say is a perfect example. If there was a need for a reminder, when we set up the company, we started with a stance of being regulated in the US and in Switzerland. And for us, at the time, right, back in 17, 18, when we started this concept, people were looking at us and say, why on earth do you want to go through the path of regulations? because crypto is fun, it's non-regulated, it's awesome, it's the future of money, it's the future of everything. And we were saying, it's nonsense. It's nonsense. Because if we believe that the traditional financial system is going to leave room for something new without any bridges with what is currently being known, it's fantasy. What you're saying is, first of all, the US market remains the largest by far capital market on earth. Second, nobody wanted to invest before having a genuine validation from the traditional banks. When Larry Fent moved from a stance in 2017 to say that Bitcoin was a scam, is in a Ponzi scheme, and then starting 2023 or 22, whenever he started, to say that this is the greatest thing ever, people says, oh, if he changed his mind, we have to listen. So none of us mattered really, because we were saying the same thing for a very large number of years. But suddenly you have those. So the point is, once you have the validation, and I'm not saying it's good or it's bad, I'm just saying factually, once you have those individuals saying, you know what, this is a good idea, then we realize how much water there is that is flowing through the, going under the bridge.
I think another difference is that, since in Switzerland, since few years, it's possible to buy through banks such Sygnum that actually underline, so like real Bitcoin, not through like a product. And I think a lot of individuals, company, and investment firms, they add that option, which for a lot of people are actually a preferred way to get an exposure to Bitcoin or other cryptocurrency. What is fun is that after the approval of the ETF in the US, on our side, on SIX Exchange, we actually saw a demand going to these ETP that maybe like until recently they were not really attractive. So it seems that, as you said, now with the validation from the regulator in the US, also Swiss and European investor feels more comfortable to have an exposure to this new asset class.
When you say the ETPs were not attractive, are you referring to the incredibly high fees that products in Switzerland have?
Well, that's clearly a problem, but that's the beauty of the competition. Now I guess these product issuers, they have to readjust their strategy.
Fees will certainly come down in this space, no doubt. Yeah.
One comment is, we've been asked very often, so in the past, why are you not stepping into the business of ETFs? And we didn't have really a reason for it. The only thing we came up with is say, look, for us, we believe that ETF, first of all, is a race to zero in terms of fees. And second is the next vanguard of crypto is most likely going to be Vanguard. Well, ironically, he's the only one who said that he didn't want to do this, but okay. But the principle remains. ETF is about distribution network. Right. And you cannot build BlackRock's or Fidelity or Vanguard or whoever distribution network. This is simply not possible.
It's also the brand name, right? They have so much years of experiences that they have built with the brand name. So I think adding on your point, Florian, it's not even validation. Validation is a huge step, but it's also with ETFs, the barriers of entry gets completely shattered, right?
Yeah.
So now it's not a very technical product where people don't have to understand. A normal investor has been hearing this word Bitcoin for more than 10 years now, but had so many barriers to enter this market, right? Didn't understand anything, didn't want to bet. So the risk-taking capabilities go high as the barriers of entry. And as you said, the cost will also come down because the competition is increasing.
When you talk barriers of entry, do you mean institutional investors had these barriers? I mean, for a private person, it's been incredibly easy, whether Swiss-based or US-based, to sign up at so many places really to
But
buy
maybe
crypto.
an average investor did not understand, right? Like, if I can invest through my bank, it sounds more trustworthy than opening an account with an exchange, and then you have negative news about the exchanges. So, right? So I think we are too engulfed in the crypto world, so where we think that everybody understands this, but there's a lot many traditional money where people are just wanted to dip their toes, but didn't have avenues to do that. Or trust, right? Validation was the big step here also. So I think ETFs are not only attracting retail money, but is also a lot of institutional money where they said, okay, if a BlackRock enters, maybe I can put 5% of the fund there, right? And
Now, the panel we have here is really DeFi and Web3. Now, I fully agree Bitcoin and Ethereum is centralized, mostly, in the case of Ethereum maybe. But let's talk about DeFi protocols, right? And DeFi apps and all these exciting new technologies that haven't been around since 2009. What is happening in this space?
Well, so in our opinion, and DeFi is a very large chunk of our business. As I was mentioning, we manage, and let's say an example. We manage money for protocols, namely for IOG, which is on our website, so it's no news to nobody. Say we manage money for the Cardano ecosystem. And so what happens is a protocol has a bunch of its own token, and obviously the only way to manage liquidity was to realize his own token. So basically you are a one-way seller of your own token, which is a little bit of a limited way of generating liquidity. So we enter into the business of saying, look, instead of just simply selling your token, we are going to act as an asset manager, genuinely. So we're going to take your tokens, we're going to make you enter in the world of derivatives, which is CeFi, which is going to generate yields coming from derivatives, and we're going to deploy into DeFi. So DeFi in general, what is it? It's a lending and borrowing platform, which is totally decentralized because there's no ownership. As a result of this, there's never been any default of a DeFi pool. There's been hack and fraud, sure, but there's never been any default. And it's very important, the difference to make. Why am I saying this? Is because the DeFi, the way it is set up, it's a brilliant idea. Meaning that you come to present your bids, someone has the opposite need of what you are offering, and therefore they make a transaction. You as a provider of liquidity, you get a fee, which is where you generate your yield from. I'm going back to the example of the emerging markets that I was saying. It's exactly the same thing. You are going into territories where people have a need for small, medium, or large borrowing, and you are providing the liquidity. The results of this was a mushrooming of this activity over the years, which has been more and more regulated, into then it became a little bit constrained. DeFi is solving a lot of those access because the access is limitless. So what is the future of DeFi? We think that today you have platforms, Aave, Compound, 1inch, etc. Many of those, what have they done? Well, you come from an idea. It's a good idea, but of course, not everything will work. Like every borrower and lender in the traditional world, not everybody succeeds, not everybody performs. This is the role of a manager to say, am I able to borrow and lend to this counterparty or not? This is the role. That's why you need someone like we are trying to do in this environment ecosystem, is to provide a solution that is reasonable for players, investors, borrower, lenders to act into this.
So let me see I understand this correctly. You use the protocol coins as collateral, you raise money with it, and then you invest that money in traditional finance or maybe in DeFi protocols again?
No, there's no bridge with traditional finance. It remains exclusively in the crypto world. So every protocol has a certain supply of its token. What you realize is on the other side, you have a vast community who have the exact opposite need. Obviously you have, because otherwise there won't be any transaction, right? You need to have a lender and a borrower. So that's why you have some providers, you have some pools or some protocols that are more active than others. That's why also what is very important, like in any other business in the world, by the way, you need to have a large community of people who believe in your product. If you have a small community that wants to use your product, well, then you have nothing to sell.
Right, and unlike companies like Celsius, you do this in a DeFi fashion, so you don't actually run the counterparty risk.
I mean, it's very interesting that you mentioned Celsius, because we were very active in Celsius by liquidating their assets after their bankruptcy. But we refused to work with Celsius because Celsius was a centralized business model to deploy into DeFi. And for us, and Alex Mashinsky was someone we knew, and we're saying, look, we don't understand the business model. It's either DeFi or it's CeFi. If it's CeFi, I need to be rewarded for my credit risk by investing money into your company. But suddenly it was, the business model of Celsius was, either you invest in a Nestle bond and you get 4% with Nestle, or you invest in a Nestle bond with me and I pay you 7%. You're like, well, that's some bit odd.
Right. So what about you? How do you see DeFi applications?
Yeah. Well, I mean, we are part of centralized FMI. So, for us, going back to the differentiation between asset class, right? I mean, what is considered security, it is already under a very clear legal framework. So I doubt that we will see, Nestle issuing their bond or their shares on a DeFi protocol. However, I think what these protocols have introduced is sort of pressure and challenge to the traditional financial system. I mean, we are working in this industry, and I mean, clearly, especially in banking, like we don't see innovation happening on a daily basis. So this protocol have introduced a way for market operator to be able to transact, 24/7. Stable coin, the possibility to move, US dollar from point A to point B in a few seconds without having to rely on traditional banking hours. So, we as SDX, we took that challenge, and we are now building, and it's already live. We are running, centralized exchange CSD on blockchain that fulfill all these requirements that we need to follow, because we are dealing with security, independent if they are digital or not. However, we are also introducing certain technological advances, such as the possibility to have instant settlement, atomic swap, and now also with Project Helvetia that we are running together with SNB, having wholesale CBDC on our private blockchain will allow to benefit from this technology advantage also for traditional products such as security.
Yeah. Can you imagine operating a DeFi architecture on a private blockchain? I mean, there's some projects going on. Singapore, for instance, is working on that.
Yeah, absolutely. I think that's the long-term view. I mean, the beauty of blockchain is that allow different operator to work between each others without having these silos. And I think in the long term, we will see also FMI such as SDX and SIX to operate on public blockchain. However, that require a lot of change, not only on the FMI side, but on the regulator side, on our clients, banks that are operating these products now since years. So I believe that in the long term, the future of FMI will be to manage this bridge between different blockchain and to allow a sort of more synergy approach between different exchange, banks, and investors.
Yeah. Nayana, I saw you nodding enthusiastically when I said DeFi and private blockchains. Can you maybe paint us a picture where you think that journey could lead us?
The reason I was nodding is when he talks about that you can open a DeFi ecosystem, as you said, in the private blockchain, but is it then really truly DeFi, right? Because you are, again, as a centralized player, obstructing and making your own ecosystem. Like, for example, at Sygnum, our CeFi and DeFi strategy is a very important one, right? We already bridged the gap of getting the DeFi to CeFi, right? Whether it is supporting the protocols, the founders of the protocols, giving them access to traditional world, right? Or just treasury management with the interest rate scenario, how we saw MakerDAO wanted to just do treasury management with traditional products, right? And now the tide has turned, right? The DeFi rates are up, there are more transactions happening, so then they can bridge that from CeFi to DeFi already. However, the second part of the strategy is very interesting, where we allow the centralized, our normal client giving access to CeFi, but with the safety and the regulated framework that we already have. So that's one aspiration that we have, where, say, our average client who's holding his assets in a segregated wallet can be given access to a DeFi lending pool, for example, right? However, I feel, and as I already mentioned, that regulation is a very key factor, right? Being a regulated player. So while a DeFi on a private blockchain are the bridging till we get there, however, I feel the ideal world would be where we can really open up the access to the DeFi players, remaining under the CeFi umbrella and under the regulatory framework.
So DeFi, but regulated. You're all regulated by the same entity here in Switzerland. Do you think our regulator understands DeFi?
I personally think that the regulator here, and I'm making the comparison with the other regulator that we have in the group, the clear advantage that we have here is you have at least a discussion, that is constructive discussion with the regulator, because this is exactly how it functions, what it has been. So therefore, you have you navigate this by let's try to make it work together. Let's see if there's a path. On the other side, other regulators, not to name them, they are regulating by enforcement. So basically, you know that you don't have really a discussion. And it's very interesting, I don't know if you've seen it in the papers, that you had recently 2 senior lawyers that were forced to resign from the SEC because the court understood or judged that they were acting in bad faith. So there is a lot of things in the US that is currently having pressure and need to change for the way, not the rules necessarily, but the way regulators approach this. So I think we have a clear advantage in Switzerland for sure.
And I think what helps is because, as you said, that the regulations have been clear in Switzerland for quite some time, right? So there's a strong ecosystem from the industry, whether they're banks, asset managers, right? Traditional players, such a big players like SIX entering into the world. So having these conversations also become more easier because there's a strong network of industry players who are in this space, who want to push the regulator also. So,
yeah, I mean, I agree. I think we are seeing. I think now majority of banks adopting cryptocurrency. Even like big one like PostFinance recently announcing with Sygnum, launching crypto offering. I think that's very important for the Swiss market. We have SIX running an exchange on a blockchain. So this clearly to me means that regulator is open, is discussing with the players and trying to find solution. At the end of the day, it takes time, but I think we have a clear advantage over other jurisdiction.
So I've never been on a panel where people from regulated companies said anything bad about the regulator, and I don't expect this to be the case here. However, there were a lot of discussions with the regulators on topics in crypto. Staking, for instance, was very passionately discussed with the regulator. I think now we found a solution that makes all participants happy. But the regulator had to move quite a bit. Do you think the regulator, and some, it's not just the regulator as such, also tax treatment, right, of staking seems a bit weird, also tax lawyers tell me anyway. Do you think there has been a shift from the regulator, from the very adventurous one we have seen in 2015, 2016, to where we are now? Or is it still the same, we can do it attitude that we've seen back then?
I think scrutiny for sure has gone up, right? With whatever happened in the industry just in last 2 years also, right? More and more questions are being raised for sure, and I think regulators are looking at it with a microscopic lens. But it's surely moving in the right direction. I just hope that Switzerland, the country, the regulators can also influence other regulators across the world that how to have this conversation, right? But I think we have moved a little bit away from the adventurous spirit, and it's in the benefit of the industry. Maybe we can be the guiding force for other countries.
I think the industry has also changed and matured. Like a few years ago, there were just, it was a very, very niche industry, and just a couple of players. Now we see major banks adopting this new asset class. So of course, regulator is of course under a lot of pressure. There is also, I think, from other jurisdictions, the EU, the US, also trying to create some clarity around cryptocurrency and digital assets. So I think it's evolving. I still think that Switzerland is is going to the right direction. Of course, now the competition, especially coming from the European Union, is very strong now with MiCA. So it's important that we stay competitive also in an international environment.
I would add also that in terms of the regulators, I mean, for sure, there's a huge difference between 2015 and 2024 because the market size, even if it's still small, has tremendously grown, as it was said. If you look at MiCA, it's the core focus on MiCA is really about KYC AML. And it's obvious, it's normal. You don't want to have this crypto being used for anything else than it is supposed to. But then for DeFi, as we're talking about this subject, it's about, as it was decided. So if you go on private blockchain, it means that your fence surrounding your territory is fairly small. So then if you expand the fence and your territory become much larger, and you have a way of saying, okay, KYC AML can play within the ground, or if you don't do KYC AML, you stay outside. That's one. But the second is the regulators are also faced with something that is linked with, Web3. We say, oh, this is Web3 versus Web2 and so on. There is 3 billion gamers on the planet, according to figures that are not mine, but 480 million people are spending more than 35 hours a week playing games. So when you have a crowd that big, knowing that for them, a digital ownership doesn't have to be explained. It is part of their wealth. It is part of the way they transact. This is part of the way they behave with one another. So the regulator has also to face that, to say, it is not a matter of do I want to do or do I don't want to do? Because if I say, no, I'm not regulating, this immense crowd is still going to do this, but outside of a framework that is controlled and decided, and that will lead to catastrophe, because those are, again, very retail people, and you don't want to create a catastrophe, financial catastrophe for retail, because that is affecting everybody.
So are you saying that as a gamer I need to go through a KYC process because I could potentially lose money on those skins that I bought?
So what I'm saying is, if you are part of this, is a very good question. If you say, today we are at the premises of what's called GameFi, right? But when you want to monetize what you have in your game, then you have this bridge, right, with GameFi, DeFi, and that's why if you want to have your wealth being used, deployed, and eventually being put in a financial system, yes, there is KYC AML, because otherwise it's too easy to cheat the system. And the problem is, cheating the system is tremendously negative for those who want to play this properly.
I think it's also important, and you mentioned it before, like what's really decentralized. And I mean, yes, we have a good example of a fully decentralized protocol, which is Bitcoin, and then we have like thousands of different other protocol projects that they claim to be decentralized, but they're not. When you start to have some kind of centralization that can be like from a simple bridge or a CEO, a foundation, then you need to fulfill certain requirements from the regulator where you operate, and I think that's very important to understand. So everything which is not everything that is Web3 is decentralized.
Also, I feel the participants will embrace this KYC AML guidelines more and more, right? 10 years back, or even 3 years back in the last bull run, right? People were like, I know how to do self-custody. I don't need a CFI player. I don't need to enter the financial ecosystem. I can survive off my own. And then your portfolio is valued maybe 20x of what you thought it would be. And then suddenly you want to just use this to maybe just buy a property. And if you don't want to do these guidelines and stay outside, then you really cannot even enjoy the wealth or that you've earned in this. Whether now what is happening in GameFi right now happened in just the Bitcoin and Ether for so many years. So I feel participants also are kind of looking for more guidance, so they can, if and when they want to be, they will embrace this more and more to come into the normal financial ecosystem.
So when you say that the future is a KYC DeFi Web3 world, why do I need that DeFi thing to start? Why can't I just go to a bank and do traditional banking? It feels like it.
Sure. I mean, that's a very good question. I think that what is the core of DeFi? DeFi is bringing together two parties that want to transact and do not want necessarily to have 5 intermediaries that are going to apply immense fees with it. One very good example is what has it happened in terms of the financial improvement with crypto or with digital assets or blockchain. You have now in countries, let's take Africa, where you have many currencies that are not convertible, not transferable, nothing happens. You have countries, they are neighbors, they are one next to another. They were never been able to transact without the help of a middle bank that usually apply fees up to 15, 20, 25% in some cases in both ways. They're neighbors, they want just to transact across each other border. You are now able to settle the transaction in 4 seconds with a very small spread. This is real improvement. DeFi is a little bit the same spirit, isn't it? It's you have people who want to enter into a lending, borrowing in order to generate yield on their assets. But why should it be only the privilege of very large transactions that can support the fees? That's not logical. And again, I mean, our absolute conviction has been to say, crypto, for transactions, for finance, for everything, it is not for the 20% lucky people on this earth who have access to banks and banking services. This is about 80% of the inhabitants of this planet who don't have access to banking services. And this is where the business is going. And for this, you need to remove frictions and fees and transaction hurdles because they just simply cannot afford to pay it.
I'm not sure they can afford to do KYC either.
Well, I don't know. I mean, we don't know each other that well.
No, I'm just thinking a lot of challenges. The reason why so many people are unbanked is because they don't pass KYC.
No, that's not true. I give you an example. Our client, Cardano founder Charles Hoskinson, has decided he wants to digitalize Africa in a sense that giving them an economic digital identity. We build a blockchain for Ethiopia.
Because they don't have one now, right? Because they don't have a proper identity now where they can prove with legitimate papers who they are.
Exactly, because today you have too much fake. So basically, we built the blockchain in Ethiopia because you know what? No one could, after graduating from university, their biggest challenge was to prove that their diploma was real and not fake. And then we deployed on the blockchain a 3 era with NFT, that you go to your interview with a QR code, the person said that you are really the graduate. So what you are saying is true and is not true. It's not only the KYC problem, but it's the infrastructure of the KYC that is lacking. So we are in blockchain again, is developing at light speed a structure that will allow those individuals to basically prove who they are.
Yeah, I mean, I have a slightly different view in the sense that, again, I think the key is really about is there any kind of centralization in the service, in the protocol that I operate, and I think, I agree that I think that the clear example of stablecoin that allow people that live in country where they don't have access to the US dollar because simply you cannot have a bank account from a different currency than the local currency. It gives like huge benefits. It allows to transact at relatively low fees. But still, these are services, are products that are centralized. We have Tether, we have Circle, wherever, and they need to fulfill certain regulatory requirements from the jurisdiction where they operate. So, we can call it DeFi, we can call it Web3, but they are still centralized services. So there are a few exceptions, but at the moment we see more, a future where, yes, we will have, blockchain technology that will bring some advantage to the financial industry, but we still see the need of, central entity, FMI, banks to play a role.
Awesome. Now we're ending the end of our time here. I would like to ask you one parting question, and that is, what do you think is the next big move that we see in DeFi? And for you, your Web3 hub may or may not play a role in that answer.
So it's interesting why we went into our Sygnum hub on Metaverse, right? Our idea was to become a part of the community, to participate, to learn from it, right? Since Metaverse is so new, we are still not able to transact there or provide information, trade there. But however, we use it for our events. We have an NFT gallery there for all our tokenized assets. So it is surely an ecosystem. If it develops, then it also enables players like us to, literally have a multiplier effect on your access to the potential market. So, and to answer your first question, I think I would, for the sake of repeating myself, but clarity on the regulation part, right? How can we bridge this gap in the best And MiCA is helping it because once EU have these regulations throughout, so it's a huge market which will be guided by one regulation. So, and it's been in making for a long time, but I think just the clarity on how you can bridge this, and at least you can provide the people who want to be in that ecosystem of KYC, AML, I think that's a huge step first. And then I would say the later part is how to bridge the entire industry, but that's a bigger problem to solve for later.
Awesome, Paolo?
Well, as a CSD, I think for us, having Swiss franc issued by the SNB on our blockchain, that will be like a major milestone. At the moment we are tokenized as Swiss franc, so you as a SDX member, you still face SDX as a counterparty risk. So that for me will be a game changer.
So, we really think that, again, the one who thinks that we can have a phenomenal growth of financial transaction outside of a system is fantasy. And the future of DeFi is to say, or to find a way to say, okay, DeFi, as I said, is a way to transact, generate yield for the investors, to transact for the users, going around the system today that unfortunately have become unaffordable for many. So this is the first step that we are going. And decentralization, sure, the concept of it might change. I agree completely. But this is what is being needed. So we see a very important evolution toward this direction. In CBDC, there's always a lot of topic about how it is. For us, the way we see the great advantage of CBDCs, and then it will mean in DeFi, again, is for developing country, in our opinion, because when you have a country that is asset rich in its soil, he has a currency that today doesn't reflect what he has in his soil. So the CBDC for those countries will be a way to link tokenization of the material in their soil. Once their currency is stronger, CBDC, because it's linked with what they have, then you can deploy it and you can use it efficiently into DeFi for those who need the most.
Right. Thank you very much, Florian, Paolo, Nayana. Thank you for being on stage with me this afternoon. Also, thank you very much to the audience for staying with us to the end. I'll see you next time.
Finally, the mandatory risk warning. The content of this episode is for general information only and is not a recommendation to buy or sell any financial products. All information is supplied without guarantee, and this is not an investment advisory.